Thanks to the return of the trade wars, Bitcoin has now retraced back to major support, but silver may be able to predict Bitcoin's next move, so let's break it down. Hi everyone, I'm Paul with ArcisFX. Stick around until the end for this week's summary of key levels to watch to inform your trading. But first, could Bitcoin be about to follow silver and put in an epic rally? This cup and handle suggests it could be possible, so let's jump in. So the first thing to point out is that we have a more unusual cup and handle pattern with silver here. Typically you have the handle of the cup and handle as a descending channel like this, as opposed to an ascending channel, which are a little bit less common. But as you can see with silver, it played out quite nicely. So the reason why the cup and handles are so significant is ultimately you have a clearly defined neckline in the price action, which also is supported by a curving, which essentially shows where the sellers are in control and then where the bulls start to take back control. And the neckline break essentially acts as a tradable event or something to act on. Now, when you have the cups approaching completion and it starts approaching the neckline again, following a markdown phase and then a move up, there is a big battle between the buyers and the sellers there. And that is essentially what causes the handle to form. When you see a handle which is ascending as opposed to a descending channel, it does potentially highlight a bullish posture, despite the fact that the probability is more in favor of a downside move, which is why when you get a break to the upside out of a cup and handle with an ascending channel as opposed to a descending channel, you kind of have these parabolic moves. And we look at Bitcoin, it's a very, very similar pattern compared to silver across a similar amount of time. We have Bitcoin essentially the first peak of the bull run in 2021, in April 2021, is when we entered the pattern and started to form it. And then this is the second peak in November 2021. And then this is the bear market. And then here we have January 2023, essentially the beginning of the most recent bull phase for Bitcoin. And then we confirm the cup essentially in November 2024, which was the US election. And then since then, we put in all new highs and have been forming the handle. So the probabilities of a breakdown from an ascending channel are greater than a descending channel. But nonetheless, if Bitcoin does follow silver's playbook, we could have some serious parabolic gains from Bitcoin. So what do we need to see? Well, firstly, Bitcoin would need to break out of its current trading range, which it has begun to do in January. But of course, it has all of these resistance areas to get above first. But if it can do that, what we could see is something like this. We put in all new highs, retrace a little bit, and then away we go. But let's have a look at what potential gains we could have if this occurs. So here's silver in isolation, and the move it put in on the back of this breakout was about 230%. Now, if Bitcoin puts in a similar move from current levels, that'll take us to around 300K up here. Now, that is a serious move from Bitcoin. We can't obviously look at silver in the same way we look at Bitcoin because they are very different assets. But the one thing they do share is they are a store of value, which of course cannot be understated. Bitcoin isn't like all the other cryptos. It is seen as a hedge against traditional economic volatility. And despite all of the fervor and the conversations around a potential bear market for Bitcoin, this particular comparison shows the potential for more upside if Bitcoin can break out to the upside of this handle. But if you look at it from the perspective that, okay, if we want to trade this range from where we are now at around 90K to maybe around 135 at the top of this channel, then this is the area to enter. If you think Bitcoin has the potential to mirror silver, then again, this is the best place to enter as the price action is starting to break above the trading range which we've been in throughout December, and it looks set to move up from here.
Hi there, I'm James. I'm the founder of ArcisFX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.
But now let's have a quick look at Bitcoin's current price action. So we had this head and shoulders pattern following a nice bounce from our old ideal retracement zone between around 80 and 90k, and then we had a nice move up into this upper range, finally breaking above local resistance at around 94.5k, which we were stuck below for most of November and December. Then we had confirmation of the head and shoulders pattern with a candle body close below the neckline, but then the price action got stuck between what had turned to local support at 94.5k, but unable to get back above the neckline, let alone high enough to invalidate the right shoulder and therefore the pattern in its entirety. And because the bulls couldn't do that, the sellers took back control at the back end of the weekend, early Monday, and then we moved all the way back down to our fresh ideal retracement zone, which was then at the start of the week between 93 and 92.5k. Unfortunately though, as a result of the trade wars resuming over the last few days and the increasing threats of tariffs and reciprocal measures between the US and the EU, instead of having a nice comfortable bounce out of this zone, our expected bounce point, you can see this was strong resistance. We were hoping to have flipped now to support, but instead a bull flag formed. We didn't get a break higher to invalidate that pattern, and bulls couldn't hold this level, and we rolled over, and Bitcoin has now performed essentially a full reset from where we were on the 12th of January, and all of those gains have been wiped out. But we're now at major support with the 3-day 200 MA and the 4-hour 200 MA still supporting the price action at these levels, except this time we haven't had a dip to 89k, and currently 90.5k is supporting the price action. And just to highlight, the current price action remains in this bear flag, and current price levels is around 90.5k. You can see we could have a possible retrace back down to this lower channel support, except if we put on this moving average, which is the 3-day 200 MA, you'll notice how it is still supporting the price action. And of course, we don't want a dip below that, because that'll be a further reset for Bitcoin, and the bulls will then have all of the resistance levels it had back in December to overcome. So we do want to see a bounce from here, because if we don't, we risk having this bear flag confirmed, which could equal continued downside for Bitcoin following November and December, which could take us all the way down to 74 to 69k. But for now, let's check in with key levels to watch this week. So here's the thing, local support and major support are the same thing at the moment, right? Local support is 90.5k and major support is also 90.5k, because major support is reflected by these moving averages, the 4-hour 200 MA and the 3-day 200 MA, which have been a major factor oppressing and supporting the price action since November, and therefore any loss of this current level will make it very difficult for the bulls to continue higher in the short term. And therefore, even though we could call around 87k here as local support, because if we lose this area now, the bullish narrative changes. But for now, I'm going to call this major and local support all in one. Now on the flip side, we have local resistance at 92.5k with major resistance now at 94.5k. So there's been a serious shift in the picture for Bitcoin now. But just of course to highlight, 101k is still the next major resistance level above. But seeing as we're now back to where we started and we're nowhere close anymore of having an attack on that, we have to just ignore that for now. And of course, we've got secondary support made up of the 3-day 200 MA and the 4-hour 200 MA. But bulls definitely need to hold this level for any upside continuation in the short term. But that's it for now. I'm Paul with ArcisFX. Don't forget to like, subscribe, and drop us a comment. And I'll be back tomorrow with a members-only live stream with James. So if you're not already a member, please consider joining. And then I'll be back again on Thursday for a more crypto-focused live stream where you can ask me questions and get me to check out any tokens you're thinking of trading. And we can, of course, see how Bitcoin is doing at the back end of the week. And then we've also got altcoin gems on Friday. And also, if you're not already in our private group, you can check out the link in the description, as we'd love to have you. And as always, say no to FOMO.